Welcome back to the channel, everyone. Today, we're time traveling to 2026 to explore the future of making money with crypto. The landscape is shifting dramatically, and the strategies that worked yesterday might not be the winners of tomorrow. Forget the simple buy low, sell high roller coaster. The new frontier is all about smart, sustainable, and often passive income streams. In 2026, it's not just about owning crypto. It's about what your crypto can do for you. The big story? The incredible fusion of artificial intelligence and blockchain technology. This isn't science fiction anymore. It's the new digital economy. So if you want to get ahead of the curve and discover the most powerful ways to build your wealth in the crypto space, you're in the right place. We're going to break down 4 game-changing methods that are set to dominate the market. Let's dive into the future of crypto earnings. Our first and arguably most exciting strategy for 2026 is an iGPU renting. What in the world is that? Well, the AI boom is real, and it's incredibly power-hungry. Artificial intelligence models, from language generators to complex data processors, require massive amounts of computational power. And the key hardware for that power is the GPU, or Graphics Processing Unit. Now, instead of these GPUs just sitting in gaming rigs or mining farms, a new ecosystem has emerged: decentralized physical infrastructure networks, or DPNS. These platforms allow anyone with a high-end GPU to rent out their computing power to AI developers and companies around the globe. Think of it as an Airbnb for your computer's brain. You connect your hardware to the network, and when it's not in use, it's crunching data for AI projects, earning you a steady stream of crypto in return. The beauty of this is that it creates a real-world utility for your hardware. You're not just speculating on a token. You're providing a tangible, in-demand service. The demand for AI processing is projected to skyrocket, making this a potentially lucrative and stable source of passive income. Projects in this space are building robust marketplaces where supply meets demand seamlessly. So, if you're a gamer, a creative professional, or just someone with a powerful PC, your hardware could soon become one of your best earning assets. It's a fundamental shift from pure financial speculation to participating in the technological backbone of the future. Next up, let's talk about the evolution of DeFi with liquid staking and advanced yield farming. Staking isn't new, but in 2026, it's far more sophisticated. Traditional staking required you to lock up your assets, making them illiquid. You earned rewards, but you couldn't use your capital for anything else. Enter liquid staking. This is a complete game changer. With liquid staking, when you stake your assets like Ethereum, you receive a derivative token in return. This token, often called a liquid staking token or LST, represents your stake position and continues to accrue staking rewards. But here's the magic. This LST is fully liquid. You can trade it, use it as collateral for loans, or deploy it in other DeFi protocols to earn even more yield. It's like earning interest from 2 different banks at the same time with the same dollar. You're compounding your earnings potential. You could be earning staking rewards on your ETH while simultaneously providing liquidity with your LST to a decentralized exchange and earning trading fees. Beyond that, the DeFi landscape of 2026 is rich with sophisticated strategies. We receive more complex yield farming vaults that automatically optimize your positions across different protocols to maximize returns. And with the growth of decentralized stablecoins, lending and borrowing have become pillars of the ecosystem. You can lend out your stablecoins for a reliable, low volatility yield, acting as a decentralized bank and earning interest from borrowers. The key here is capital efficiency. Every dollar in your portfolio can be working for you in multiple ways, creating a powerful compounding growth engine. Now, for those who love the idea of mining, but are put off by the insane hardware costs and electricity bills, our third strategy is for you: the new era of cloud mining and strategic altcoin mining. Let's be clear, the old school image of a garage filled with noisy, overheating rigs is becoming a thing of the past for the average person. In 2026, cloud mining has matured. It's no longer the Wild West of questionable websites. Reputable, Transparent platforms now allow you to rent hashing power from large-scale professional mining operations. These operations are often located in regions with cheap, renewable energy, making them far more efficient and sustainable. You can buy a contract to mine Bitcoin, for example, without ever touching a piece of hardware. You pay a fee, and the mined crypto is deposited directly into your wallet. It's a straightforward way to get exposure to mining rewards without the technical headache. But what's even more interesting is the shift in what's being mined. While Bitcoin remains the king, 2026 is seeing a surge in altcoins tied to specific real-world applications. We're talking about altcoins for decentralized storage networks, verifiable computation, or even the AI GPU networks we mentioned earlier. Mining these altcoins can be incredibly profitable, especially in their early stages. The strategy here is to identify promising projects with strong fundamentals and a clear use case, and then participate in securing their network through mining. It's a more active approach that requires research, but the potential upside can be significantly higher than just mining the established giants. This approach combines the passive nature of cloud mining with the high growth potential of savvy altcoin investing. Finally, we can't talk about a long-term crypto strategy without mentioning the time-tested foundation of it all, HODLing. But in 2026, HODLing isn't just about buying and hoping for the best. It's about strategic accumulation and a deep understanding of market cycles. The term HODL, which stands for Hold On for Dear Life, remains the core philosophy, but it has evolved. The primary assets for a strategic HODL portfolio are still the blue chips, Bitcoin, and Ethereum. Why? Because they have proven their resilience, their network effects are unmatched, and they are increasingly seen as legitimate macro assets. Bitcoin is digital gold, a hedge against inflation and economic uncertainty. Ethereum is the foundational settlement layer for the vast majority of DeFi, NFTs, and the decentralized web. Their roles are clear and entrenched. The 2026 strategy involves dollar cost averaging, or DCA. This means investing a fixed amount of money at regular intervals, regardless of the price. This approach smooths out volatility and reduces the risk of making a large investment at a market top. It removes emotion from the equation and builds your position steadily over time. Furthermore, a smart HODler in 2026 isn't just letting their assets sit idle. They're using them. They might be using their Bitcoin as collateral for a stablecoin loan, or staking their Ethereum for that base layer of yield we talked about earlier. The idea is to maintain your long-term position in these core assets while still making them productive. This isn't a get-rich-quick scheme. It's a patient, disciplined approach to wealth building. It's the bedrock upon which you can build all the other, more active strategies. Your HODL portfolio is your anchor in the stormy seas of the crypto market. So, we've covered IGPU renting, liquid staking, modern cloud mining, and strategic HODling. These are powerful tools, but they all come with risks. The crypto space is still volatile, and it's crucial to manage your risk intelligently. First and foremost, never invest more than you're willing to lose. This is the golden rule. Diversification is your best friend. Don't put all your eggs in one basket, whether that's a single coin, a single protocol, or a single strategy. Spread your capital across different areas to mitigate the impact if one part of your portfolio underperforms. Do your own research. Don't just follow a YouTuber or a social media influencer blindly. Understand the technology, the team behind the project, and the tokenomics before you invest. Security is non-negotiable. Use hardware wallets for your long-term holdings. Enable two-factor authentication on all exchanges, and be wary of phishing scams. Your security is your responsibility. Looking ahead, the digital economy of 2026 and beyond is being built on these technologies. The lines between finance, technology, and everyday life are blurring. By understanding and carefully engaging with these emerging trends, you're not just investing in crypto. You're positioning yourself at the forefront of a major economic transformation. The opportunities are immense, but they reward the prepared and the prudent. And that's our look into the future of earning with crypto in 2026. From renting out your computer's power for AI to making your assets work for you in DeFi, the possibilities are more exciting than ever. Remember, the key is to stay educated, manage your risks, and think long-term. The world of digital assets is constantly evolving, and we'll be here to guide you through it every step of the way. What strategy are you most excited about? Let me know down in the comments. I read every single one. If you found this video helpful and want to stay ahead of the crypto curve, make sure to hit that like button and subscribe for more content. Thanks for watching, and I'll see you in the next video.